Your greatest asset is yourself. In a social corporate relationship, our energy, knowledge, and abilities, depending on their value, are exchanged for the fulfillment of our wants and needs. So how do you figure out what you're worth? How do you determine the optimal structure of human and financial capital in your life? The most common assessment of human capital occurs during the hiring process. The employer evaluates your performance and tells you how much they are willing to pay for it. As a result, you receive a regular income that sustains your life, and the employer gets your labor and the profit that labor generates. Human capital is assessed at the bank when a loan is made. The bank tries to understand whether your human capital will be able to service the loan. What does the value of human capital depend on? Among many factors, one of the most important is education. Statistics show that the better your education, the more cash flow you're able to generate. That's why it's important to take care of your children's education in advance, and then build up the necessary amount of money for that. Human capital theory uses different approaches and methodologies, but there is a very simple way. Let's say your annual income is $1 million. What amount of money do you need to possess in order to earn the same amount of the same income? If the deposit rate is 10%, you need to have $10 million. That amount would replace your human capital, but if bank rates go down to 5%, you need $20 million. With investment, human capital is transformed into financial capital. The income from investments over time can allow you to replace the income from human capital. Financial capital is more than just saved money and deposits in the bank. In addition, when using only bank deposits in the long run, inflation will not appreciably increase the purchasing power of your financial capital. Most people in developed countries have financial capital in stocks, bonds, shares, real estate. These assets have an accumulative, constructive nature, and if used properly can not only protect against inflation, but also increase your real wealth. In the course of life, human capital as a generator of regular income initially increases and then decreases, while financial capital provided that a portion of labor income is invested gradually increases, and by a certain age becomes the main asset in a person's total portfolio. The main task is to carry out regular savings of a part of labor income throughout life, i.e. to transform one's human capital into financial capital, which will become the main source of regular savings. 14. Income when your human capital runs out. In essence, it is necessary to systematically replace one form of capital with another. How do you replace human capital with financial capital? What is the level of risk involved in the formation of financial capital is acceptable for you? You can approach these questions outside the box and compare a person to a financial instrument. For many people, human capital is like a bank deposit or a secure bond. From period to period, it yields a stable fixed income. There are professions where the income from human capital is closely linked to the events that take place in one or another sectors of the economy. For example, the dynamics of income of a person working in the tourism sector is closely related to seasonality, and the dynamics of a realtor's income to the state of the real estate market. Therefore, human capital of these people resembles a share, or, more precisely, an asset with increased volatility. Human capital of the absolute majority of people in stable times resembles more like a bond, and in unstable times a stock. Specialists of Ibbotson Associates Incorporated have come to the conclusion that the human capital of an average investor is 70% bond and 30% stock. The peculiarities of using one's human capital should be taken into account when investing financial capital. If your activity generates a stable income, you can afford to take higher risks when investing financial capital. And conversely, if you're in and out, it's better to invest in high-risk assets. That is, if your human capital is more like bond, deposit, you may well invest most of your money in stocks, and vice versa. Conclusions. Over the course of a person's life, it is necessary to systematically replace human capital with financial capital. The most effective forms of financial capital are stocks, bonds, units, real estate. These assets can not only protect funds from inflation, but also increase the wealth of their owners. When forming financial capital, it is necessary to take into account the structure of human capital.